You know, the way I think about it, Vietnam, when you sort of stand it up next to China, both statist models, right, of economic development, but where with China, right, it's only recently that they've told the private sector, look, it's safe to come out again. With Vietnam, that's what they're doing right now.
That's right, Martin. And I think, it's interesting that, when it comes to, some of the U.S. policies, it's actually leading to this sort of this exceptionalism. Actually, we're starting to see that in economies outside of the United States. Why is that? Because they're having to address some of these structural issues that they've sort of put off for some time. A lot has been made of, Germany's willingness to now open the fiscal coffers and stimulate the economy. But Vietnam specifically is a case whereby, the leaders realize they can no longer rely on low margin exports when it comes to some of the new reciprocal tariffs. And I think what Tho Lam has decided to do with the rest of the leaders is have a sort of sweeping transformational change for the first time really in about 40 years that we've seen this type of change. They are elevating the private sector now to be on par with the state sector. They are unleashing the entrepreneurial class. For far too long, this sort of group has had a lack of real access to land, to licensing, to credit. And I think the Vietnamese leadership realizes, hey, we now have to sort of create a more sustainable economic growth model. And, we're really excited about these changes. I think there's a number of really interesting ways to invest in this theme.
Yeah, let's talk about that, because this is fascinating, right? This is sort of a Tho Lam, not a Deng Xiaoping moment for Vietnam then. And I'm looking at some interesting stats here. The private sector, they're sort of, up until now, it seems as though they've been sort of squandering the potential and the opportunity in the private sector because 82% of the workforce, right, is in the private sector. Is that they're not holding government jobs, right? Or they don't have jobs in the government, but these guys only generate half of GDP. It really should be much more rebalanced, right?
That's right. I think, for all that Vietnam has done to achieve sort of export success, I think, the misunderstanding is that a lot of that success has just come at the expense of, or the result of, a lot of these foreign firms. The domestic private sector in Vietnam has been sort of vastly squeezed out by the state sector, and they do not receive a lot of the same incentives that the sort of foreign sector is able to receive. And so I think, as you stated, about 80% of the workforce is in the private sector, yet they only produce about 50% of GDP. And I think with Resolution 68, with Resolution 198, Vietnam is really attempting to finally, for the first time again in 40 years, allow the private sector to just be on, equal par with the state sector. And for the first time again, that Tho Lam has said, the private sector will be the engine of growth for this economy. I think it's vastly unappreciated how important of a statement that is. The details we need to really see come to fruition, but it's certainly a really interesting moment for the country's history.
I want to link back to something that you were talking about a couple of minutes ago, Steve. This is this whole idea of U.S. exceptionalism, right? Maybe fading, and a lot of this has to do with what the president is doing. And it's not always polite. Sometimes it's even rude, right? But the outcome or outcomes, and that's what really matters. Things are happening. Take a look at how Europe is turning on the fiscal stats, etc. And you're seeing similar moves happening in EM as well.
Yeah, that's right. Again, I think the real exceptionalism is now, starting to happen in emerging markets. I mentioned Vietnam and how they are really coming to terms with finally unleashing the private sector. I think, there's a number of countries in Africa actually that are coming to terms with how should we now deal with, aid? How should we grow without, international aid? So there's a number of really interesting implications. Not all of them are positive, but in some cases we are seeing countries start to address some structural issues. And, I think investors are starting to really wake up to that. And I think, if you look at markets this year to date, MSCI emerging markets is up in total return terms about 14% year to date, while the S&P is up only 4%. And, there's a phrase that I think a lot of people point to in times like this, which is that, capital stays where it feels welcome. And I think for a number of reasons, a lot of global asset allocators have been allocated to U.S. assets. They're now not sure that that capital is feeling as welcome anymore, and they're starting to look to diversify into places like Europe, Japan, and increasingly emerging markets.
You know, the imagery, Steve, when I think about it, it's sort of like, you know, what the president has done is it's taken the U.S. training wheels off for the rest of the world. And, you know, now they're realizing, look, it's up to us now, right, whether we straighten up and ride straight or fall.
Yeah, I think that's right. I think it's a fair assessment. And again, it's not going to be in the short term. It can be quite bumpy, but there is certainly a case to be made that in the medium term, you know, this can be positive for a number of international and emerging markets. So, you know, the attempts to make America great, actually leading to the rest of the world sort of getting their act in order, starting to address some structural concerns. And so, you know, we're really on the lookout for some of these instances where countries are reforming. They are sort of adopting some of these reforms that they've long needed, and we're finding really interesting growth opportunities there.